Okay, hello traders, and welcome to this live intraday strategy webinar. Great to be with you guys. Back on the mic. Today is Thursday, January 21st. Michael Boutros on the mic with you guys. Hey, Jay, Ted, great to see everyone in the room. Good morning, Mike. Would you look at CAD Yen this morning? CAD Yen, yeah, absolutely. Hey, Jay, great to see you as well. So on the menu, it's been a very interesting start to the year, let me tell you, from all different types of aspects. I'll actually be traveling next week. Just a quick housekeeping note, guys. So I won't have any webinars either on Daily Effects or IG, but we'll be back, or SB rather, but we'll be back the following week, hopefully with a full schedule again, no problems. So DXY, Euro, Dollar CAD, Kiwi, SPX, Aussie, both the Aussie and Kiwi, my hands are in the air right now, but we'll take a look at them. Sterling at resistance, gold with the rebound, dollar yen, and I just added to that for you, Ted, CAD yen. As always, any other questions or trade setups? I'm going to go through these rather briefly. Some of them are on the move. Some of them I'm kind of hesitant to touch, okay? So here's what the DXY looked like. Guys, this was published back on the 12th, okay? The main focus was the recovery off that 89.07 level. Remember, the low was 89.20. It was 13 pips off the low before a reversal candle into the start of the year took us higher. First level of resistance we noted was 91.01. We registered a high so far, okay, for the year, for this week at 90.95, okay, so just a little bit shy. And here we are with a little reversal candle this week. Could be noise, you know, obviously we still have, well, I guess the inauguration's out of the way and kind of all that noise is out of the way, but heading into the close of the month, that reversal is kind of the focus. If this rebound, okay, has more merit, pullbacks should be limited to objective yearly open support at 89.93. So that's what I'm looking for. Kind of hoping to see support there on the pullback if this is going to have any merit whatsoever. Here's what it looked like back again on the 12th on the daily charts. Divergence into slope support, shifted the focus higher. Again, 91.01, didn't quite get it. Here's the daily chart now, but pretty damn close, guys. All right, so steady as she goes, right? Here was the hold. We wanted to see a hold at 89.93. That held. Again, yearly open, monthly open support. Here was the thrust higher. Again, failing just ahead of that. Here's the pullback. So what do we do from here? Well, so the near-term chart in a moment on this pullback, just as a sort of anecdotal look here, you have the 25% parallel, again on a closed basis, really nice pivot. Don't take my word for it, take a look. Resistance, break, a little messy there. That basically caught the intraday low today. And we're, again, it's the line in the sand, guys, 89.93. We get back below monthly open support, that's last week's low. You start to look for resumption of the broader downtrend, that this was just a near-term bear market correction. Here's what the intraday chart looks like. And here's what it looked like again last week. So no change actually to the slope. This is still the same slope we've been following. You saw the highs get caught there with the pullback catching right where we wanted. That 50 line is basically the midline of the advance. The next push higher failed again right there ahead of 91, and here's the reversal again. All intents and purposes, you're basically seeing exhaustion on this recovery, which was a real clean breakout, right, off of downtrend support. Beautiful play, guys. My point from here is this is your make or break zone. Like, if things don't start to shape up, we don't start to see some support, the risk on a break below 89.93, specifically 89.87 is the 618, and you're basically risking that resumptive move. So it's make or break. It's make or break for the DXY. The interesting thing that, unlike, well, let me take a step sideways. many other US dollar majors have set up really insane monthly opening ranges, tested the high, low, high, or the low, high, low like 4 times already. So I think you're going to get a pretty, a more conviction breakout in the days ahead. But for the DXY, man, this thing better find some support pretty soon if the dollar rebound has any merit. So that's number one. Number two, let's just take a quick segue into euro, and then we'll start going from the reports as they came out. Here is what euro looked like on our latest update. So this was back on the 19th. Start of the week, you saw a near-term breakout here, back above that 20 level, 120.92 level, the 2017 high. You had weekly open resistance. We broke through it, ripped into that 786. The pullback found support. That was our bullish inval. And then here is the rebound back into the 38.2, which is 21.66. A lot of back and forth action. You had the inauguration, you had all this stuff going on. There's still going to be event risk into the end of the week. There's not much on the docket per se, but heading into next week, you get employment numbers from the UK, you get consumer confidence here in the US, you get durable goods orders, GDP growth, the advanced read for the fourth quarter. All that hits next week. So the dollar's still not out of the woods as far as event risk is concerned, but here's euro with the rebound, 121.66. Again, near-term resistance, 38.2. The slope comes a little higher, right at 122, 121.90s. So you can envision a scenario again, if intraday we spike, I'm willing to, even see an intraday spike into parallel resistance. But again, it's the same trade that we're looking at essentially with the DXY, right? Is the pullback going to find more deeper pullback? Do we find support here before we start to launch? Does euro fail here before we start to move lower? Let's take a step back. Euro from the weekly charts, guys, just to remind you where we are, right? It's only been a 2-week decline off of uptrend, confluence resistance, beautiful divergence. This is just the first initial pullback. Ideally, again, from my part, I'd like to see a deeper setback, 20, maybe not as deep as 18s per se, but certainly a test of this beautiful pivot here. You had 2018 opens, the 618 extensions, beautiful lineup here. So basically on this exhaustion or on this advance, we would want to see exhaustion for that leg lower. Daily chart looks like this. Okay. Again, yearly, monthly open resistance, 2239. Wouldn't want to see anything beyond that if we are going to still head lower. But an area of which, yeah, I mean, even if we rebound a little bit more, not all the outside the realm of possibility is broader upslope support. True, this to me looked like a monthly opening range break. If we recover today above 2145 on a closed basis, that kind of omits that signal. So, it's a very provocative time in price, guys, and we're heading into the close of the first full month of what looks like is going to be an interesting year. So keep the powder dry here. Again, back to the intraday. $22.39, $22.36 is the 618 of the drop. That's why I have that there and not highlighted there, but same region basically. That's the resumptive move. Anything beyond that, you're looking for a pushback into 124 and above. But right now, the focus is on whether we get exhaustion up here today. Questions on euro? A little in-depth look there for the DXY and the euro. I've been tracking this one super close. Loved the spill. Even like the rebound. I was like, all right, this is going to be a nice opportunity to reset. This, a little concerning. Again, as it's clear, I don't have any exposure on this, but I've been stalking it for something for some time now. So we'll see if we can't get something in laterally there. Dollar CAD, number 3. Here's Loonie, and here's what it looked like last night. So the basic focus on this trade is very, very simple. You all know we've been watching this region for months. 2580s essentially. Here's dollar CAD into 2620. The objective 2018 yearly open, beautiful pivot in price. The 786 retracement of that 2017, excuse me, advance. Down slope support for the pitchfork off the 2017, 2020 highs. A parallel there of the same slope. Support, support, we're right there. Even near term, basic slope resistance, parallel, support, support, we're there. We're there, we're there, we're there. And you remember, guys, when it bounced here and it failed ahead of the 2020 Open, we said, hey, maybe we do get a tag at that 2619 level after all. Then for the last 2 weeks, we dangled just ahead of it. Here's the drive. We're finally getting the test of that key region, still looking for a reaction, still looking for inflection. Can't get overly bearish while above this level, okay? If it breaks, truth be told, I really don't have anything on tap to like 2350s. All right, so there's a likelihood you see an accelerated move to the downside if we break below here. But man, oh man, this is big for me. This is big for me. Also, note, when's the last time we drove sub 30 in momentum? Well, it was right here. That break still had another 4% before all was said and done. Momentum sitting right here. If we break lower in momentum below 30 and you close below the 2018 open at 2580, man, that's kind of like you just dumped a gallon of gas on that fire. So it's really pivotal for me. And again, even the slope is resistance holding pretty nicely. It's really pivotal for me on dollar CAD this week specifically. Here's the daily chart. You want an even cleaner setup? Well, let me just fix this because my OCD is going to kill me. There we go. Looking at this on a daily chart, well, the whole monthly opening range now consists of this zone just above that key support. Even better, right? If we get a break below 2580, that's essentially a break of the monthly opening range. You're looking for that extension for a late month low. Again, first level doesn't even come into play until 2450, excuse me, and that's just a swing low from back in 2018. Converges on slope into next week, essentially. So it's all here, guys. It's all on the table. It's all on the table for dollar CAD. Also, radical divergence, right? I didn't hear any divergent bugs on Twitter for dollar CAD this week, but here's the pretty strong signal. A lower low in price, a lower low in price, a lower low in price, a higher low in price, a higher low, rather in the oscillator, a higher low. Again, today doesn't count for anything till this closes, but point being, remember, the closer the divergence signals are to 50, the stronger the signal tends to be. So we're not out of the woods yet. And if you're holding shorts from a naked exposure or you're holding shorts anything sub 2619, I think you're throwing darts at it. This is pretty big. Near-term resistance, monthly, yearly open, 2713. Need to break out above 2782 to get validated turn here in dollar CAD. Here's what it looks like on the intraday chart. We're there. Now, from my experience, this is not a trade you want to mess with. It's not a trade I would take a long here because we're at support. The behavior of price into this zone like this doesn't bode well for us right now. There it goes, right, as I'm talking. So if this does break, again, the whole focus is today's close. If we were to whipsaw down into 2515 and close back into this, that might be a fade. If we whipsaw bracket to this region and we find resistance here and move lower, that's the confirmed break. You're looking for 2450, you're looking for 23 and change. But it's all about whether we get the exhaustion here. Remember, lows are very rarely outcomes, sleep into support, and here we go, right? Very rarely. Market does not reward the masses. It's going to wash out people here. There's a lot of pent up interest in dollar CAD, and price has been holding a pretty contractionary range. So I'm looking for a give here. I'm looking for inflection still off this region. 2782 is the breach. You need to look higher in the broader trend. As long as we're in this slope, the risk is lower, right? Look at this beautiful slope we've been in. As long as we're in this, the risk is lower, but you're now at support. What do? Right? Questions on dollar CAD? All right, that's number 3. So number 4, Kiwi. I don't really have a good grasp on this. It looks, and as I noted in the update, that's a breakout. Okay, our near-term bearish inval was 7180. So we're above that now. 618 comes in at 7213. Just excuse me, 7131. So a bit higher from where we are, and you're running to major fib resistance, some key highs from earlier in the month. But the idea for Kiwi has been, is this sort of false breakout, exhaustion into upslope resistance? If we buckle back below 71, is what I've been telling you since last week, look for that deeper cut, right? All within the confines of pretty radical uptrend. So this is just the first pivot, and here's the rebound. Is this resumption, a break of resistance, test of support, and then move right on? The next level's up isn't until 74, 73.90 to be fair. It's the high day close or the high week close from 2018. Personally, again, my humble opinion, I'm not buying it. I just don't think you get straight trend resumption from here. I could be wrong, but it's the same setup, right? We've been trying to hold it. Okay, Jamie tried to short on this one. We've got to hold 72.30. I mean, even if that holds, it's not really a conviction break until we buckle back below the weekly open. But all things held constant, guys, this is a breakout. If we pull back into here and it holds support, you have to allot that extension into the median line. It's been in this. Let me zoom out a little bit. This is a 240. It's been in this formation for a while, man. Pretty clean. So similarly with Aussie, although Aussie I think is a cleaner picture, here's the Aussie setup, and here's our last setup here. I'll come back to the SPX in a moment. This slope broke all the original slopes that we were looking to say, and I even told you not too much conviction, right? Low confidence on this slope. We wanted to see if it held. It didn't, and when it broke, it pivoted right higher. Here's 77.32. Here's 77.32, right? So that pitchfork didn't work. We're essentially still ranging below key resistance. I default to Aussie, okay, on the com block exhaustion trade because of this. The weekly chart again in Aussie continues to speak to me. I just love this zone. 2018 open, the 88.6 of the 2018 decline gives you 78.36 into 78.01, right? Basically 30 pip range of resistance. Caught the extension rally into the open of the year. That's the monthly opening range highs. Monthly opening range lows comes in pretty close at that 76.30 level, which was the 38.2. This is the broader decline from 2011. I think it's a cleaner setup. Now the Momo looks even more tired, obviously, right? But really nice range setup into the open of the month, into the open of the year rather. Here's Aussie on the daily chart. Again, pretty self-explanatory setup, sort of the ones that you look for to give you those clear directional breaks. Here's a monthly opening range right below resistance. You've tested the highs twice. You've tested the lows 3 times. This is a beautiful monthly opening range, okay? Confluence support, 76.35. Hey, wait a minute. That was the high here, the accelerated break here, the opening range low for the month, right? There's that black month candle for the open. Just super, super clean. So I guess I should just move this mark. Whoop. I should just move this marker for you right here. And very nice setup. Very nice setup. Let it coil as long as it wants to. Now, on the breach, if we were to break 78.36 on the upside, 79.16, just a former swing high, but uptrend resistance, right, for possible exhaustion. Break below this, tack on a retracement. Initially, you're looking for the median line. Bigger level, in my opinion, 74.55. Really nice pivot in price. But it all determines on how we react here. Initial support, 77.01, guys. It's basically the 77 handle is the monthly open. So that's right here, monthly and yearly open. Didn't want to clutter up the chart. That's near-term support. If we were to exhaust there on this pullback, you're still looking for a drive into 78.36. Again, we need to break below 76.35 to get this thing going. So it's been kind of a snoozer, real kind of just ranging, but the monthly range is preserved right below key resistance. All right, that's Aussie. Let me take a quick look back at the SPX, just because those levels have just been insane. So here's what it looked like last night, and here's where we are right now. First of all, if you go to the previous update on this, here was the downslope. That ended up being the low. And when the 618 broke at our bearish invalidation level, right around that 38 handle, the acceleration is what you wanted to see to mark resumption. That's exactly what you got. So as this thing broke, there was the pivot higher. We tacked on a new extension. I have no idea if this pitchfork is in play, but I just want to give it some guidance and mark up where we should be looking for support. In overnight trade, basically right after the US session, published this right before the close, we pump faked, and it's kind of just been an exhaustion there ever since. Here's what it looks like now. Okay, so essentially, well, we were trading at 38.57, marked a high of 38.69 before turning lower. So I don't want you to stress this slope. That's just there for guidance. Here's what we're looking at. And the interesting thing, and I was looking at this right before the webinar, is again, if we just scratch this, the interesting thing is if we take this same slope, stop traffic, it's a parallel of the same gradient we've been traveling on this whole time from the November low. Okay, so it's just, again, it's just going with the parallels, finding the original slope. For some of you who, I saw some of you guys in the some of the expo presentations I've been doing recently at the Money Show and with Nadex, going over slopes and using techniques of how to identify the original slope. This is just a primary example I was using in those setups, and just, again, continues to pay dividends. So look, again, I'm not calling the high per se, but man, if there ever was a fake out, if you're ever seeing the irrational exuberance, it's getting out of hand in my opinion. So don't want to be the perma bears in a bull market, but this is certainly something to behold. Questions? Give you a little time value there of when those levels matter, from 39, probably 39.20 if we break out here, but you're all slope from here, right? All record levels. So SPX levels to consider, check. Let's circle back to sterling. So at resistance right now, and here's SPX levels we went over, no change there. So sterling looks like this, or looked like this back on the 18th. Again, new slope, same idea, looking for topside exhaustion. Didn't get anything beyond that dip into the start of the week, right? That held. We broke. We're right here into 786. But what do you do? Let me take it back. Here's sterling. a lot of these trades, guys, I just can't get involved in because we're too from from a shorter term time frame kind of guy. You want to always be mindful as we're coming into these highs. This is when the move will be, again, everyone's pent up. We're continuing to crawl incrementally higher despite all the back and forth. This is when the pent up sentiment starts to become an issue. If the breach happens, the shorts who have been trying to call a high, they're going to get washed out so quick. That's the pivot acceleration higher. If it's going to fail, man, there's a whole lot of bulls out there, right? There's a lot of people to wash out. So you want to be mindful. What do you do in this scenario, right? What do you do in this scenario? That's the ugliest momentum. It's above 60, but it's not really. If we were to close at these levels right now, 100% it is divergence, but we can't make that assumption yet. So there's not necessarily the momentum push that you'd want to see in a sterling move like this, where momentum is not only the slope is moving up, but you're actually going through 70. Here is just, what the heck is that? So it's like death by a million paper cuts. It's just something I'm kind of just tracking still. And if we do close, let me just take a step back. If we do close 36.75, that's the level we've been talking about literally since like September. If this does close, it'll be the first weekly close above. We haven't made one weekly close above that region of resistance that we've been highlighting. So again, is it by coincidence that all these trades are coming to some big regions and I'm kind of hesitant? I don't know. Something good's going to happen here. So here's sterling on the daily chart. What do you want to do here? Holding 60 momentum. This is actually even more radical divergence. Again, bring it into a line chart. Don't take my word for anything. Higher high, higher high, higher high. Looks like a series of lower highs. All of those lower highs, this might be kind of testing it now, but pretty damn close to 50. Hallmark, exhaustion. We'll find out this week. Now, how do you simplify this? How do you simplify this? It's one of those trades. It's a simple monthly opening range. Yeah, a little noise to the upside. Yeah, a little intraday noise to the downside, but we're looking for a close and a validated break either above 37.40 to validate a move higher or below 35. It gives you a 200 pip range. I know that's not all that much help, but again, you got to trade what the market gives us, and that's basically what we're looking at here. The intraday chart, I just don't like working with this slope here, so it's a little messy. I'm just looking at this as sort of a near-term consolidation range. If this is the breakout, then this pullback should be very short-lived and accelerated higher. Not my favored scenario, but based on where we are right now, that's basically what you'd need to see. Support ahead of 36.75 and a breach really open up the upside. Really open up the upside. But I do not want to see this kind of price action here. We want inflection. So hopefully we get some sterling play here soon. All right. Last but not least, from the updates we've been following here, I know it's been a while, and I appreciate your patience. Here's gold, number 8, with a quick update there. Looking for failure on the recovery. So we highlighted this back on the 18th. Okay, it was a really good trade because we finally came into key support. Here's gold on the longer term weekly charts. Well, there's nothing really to write about home here, but the one inclination or the one thing I want to pay attention to into the close of the week is the possibility that we're marking this outside weekly reversal off the lows. Now, again, I'll show you. I didn't want to clutter this chart up on the weekly chart, and we have it all mapped out pretty well on the intraday, but just to give you like an idea. Right? So pull back, you got an outside weekly reversal. We could get a little higher. Remember, 1909, specifically 1897, this region here was our bearish invalidation. Y'all remember what happened right into the start of the month, right? Ripped higher, made a 618, never closed a week above, and then buckled to close an outside weekly reversal lower. That's keeping the broader resumptive trade still for the threat of a deeper correction. But this response here, you could get a little bit more of a blow off, sure. Here's gold on the daily chart. Beautiful zone. 1790, 1803. We literally grounded right there, reversal candle higher. We noted, okay, possibility for a little bit of a rebound here, possibility for a little bit of a bounce. Here's the recovery. Do you look for failure a little bit higher into 1880, or does this materialize into more? That's my focus. I'm looking for an exhaustion high below 1898. That's the objective yearly and monthly open. So I want to see exhaustion ahead of this region if we're going to try to go for 18 again. I'm not going to be too tough on this one. My bias is not super strong. I mean, we've been calling for this 18 level for a while. We got it. Do we get a deeper drive? I think that's all going to be determined, again, on whether we get exhaustion here near term. Here's what I'm looking at. And here's the latest gold update from our chart here. So there was support right early in the week. There was a 38.2. Okay, I was hoping for resistance at 1860. That broke. Here's the exhaustion. Is this the exhaustion? I don't know. I'm kind of hesitant here, but I'm still looking for that validation for a turn lower. You did get a nice support trigger. If you did try to fade this or you're holding a short, I wouldn't get scared out of it, actually. I'd have a break-even stop with a level at 1840 trying to get that deeper move. But ideally, we're looking for exhaustion ahead of the yearly open. So even if this were to pump, again, 1881 is the 50. I didn't have that on here, but it converges on slope today. So I just wanted to highlight that. Again, ideally, we don't get that high into the 1900s, but possibility still for gold exhaustion. Now, if you line this chart up with what we were just talking about at the head of the session with DXY, right? If we're going to find downside exhaustion in DXY, well, that rebound, again, should put a cap on the gold rally, at least near term, right? And would perpetuate a little bit more of a weaker pullback. All these themes need to kind of line up together. Don't get positioned on all of these in the same direction. If dollar breaks down, gold may rally, euro may continue to rally. You don't want to be trying to fade all of those moves and get slaughtered on a dollar move. So maybe some synthetic hedging here is sort of and also an opportunity or a strategy you might want to employ. Before I take CAD yen, Ted, let me just hit dollar yen, because I think the yen, it's actually pretty clean. Oh man, I should have talked about this earlier. We were coming into support, guys, earlier today. Where was the last yen update? Right here. Okay, guys, this is the key support level. Okay, this is the level that we need to see hold if the broader uptrend is going to be intact. And that level that we highlighted here back on the 14th was 103.28 into 103.32. We just registered a low today at 103.32. So exactly 2 equal legs off the high. I want to see what this materializes into. Again, all of these sort of false breaks. This looks like a break of the weekly opening range. We even tested as resistance move lower. If this is a larger turn, if we get back above the weekly open, hey man, we're looking for resumption. We're looking for resumption. Here's the same dollar yen. Guys, nothing has changed about this setup since last week. In fact, if you go previous to this, we actually called that high here on the 12th as we were rallying into upslope resistance. We said, watch out. Really nice divergence. We just broke. There's the weekly open. If this moves lower, you're still risking that deeper cut into the 618. Here we are. And again, my favorite Fibonacci sequences, guys, 100 off the high, 618 off the low, tend to be beautiful pivots. So what does that mean? It means price buckles below 103.20. Dollar yen should, and I would expect to see a more accelerated move to the downside. That being said, looking for downside exhaustion. Questions on dollar yen. So with that in mind, Ted, right? With the yen strength, right? Maybe at a point of inflection here. Here's what CAD yen looks like. Where is CAD yen? I thought I had that on my list, no? Maybe not. Okay, let's clean this up real quick. Let me take a look at this. Bear with me. Okay. So okay. Be careful here. It's the same theme we're talking about on all of these setups. Possible topside exhaustion, heading into regions of resistance, not really getting the initial reaction you're looking for, but there's building divergence. On CAD yen, I'd say, Ted, probably 82.40 to 82.60 is your kill zone. That's, for me, close above that, you're talking break of multi-year downtrend resistance dating back to the highs that you made back in 2017, tested once. This would be, in my opinion, a third test. Here we are, right? You know, it's a bullish trend. I don't think anyone's arguing that, but you're at trend. I mean, you're at a major resistance level, just higher. So you probably have another like 100 pips to go, maybe even 130, but I wouldn't be too aggressive on this one. All things held constant on a trade like this, objectivity is key. And if we look at this as objective as like, 101, your monthly opening range is intact right here. Monthly open 81 handle, pretty damn clean right there. That's what those dots are. One point, 2 point speculative, 3 point confirms. There's the fourth point. So I'd be comfortable with putting bullish inval at the monthly open. That's what would shift your focus objectively lower. Key resistance is right here, man. Let me also, just for the sake, this might get a little messy, but I just want to see if there's any slope that we may have not considered here. Okay. So a modified shift formation off the low essentially matches your slope that we were just looking at, right, with the gradient off the low from May. looks like possible resistant. I'm not too crazy about the 25% line, but might be something worth looking at, and further highlights essentially a needed breach above 82.60 here to kind of get the resumptive trade going. Meaning, right? You're now testing the monthly opening range highs, Ted, and resistance is just higher. This is this, man, you're getting me excited about. This is the same exact trade on all of these, right? If they breach higher, you look at the market psychology right now where sentiment's so pent up, people are gonna get super excited, but there's still upslope resistance just higher. So even if it breaches, man, those are the risky trades with the hidden upslope just above lateral resistance. Everyone might be looking at 82.60, 82.50. You got the guys who love fibs, and I love fibs too, right? But um, don't get faked out. Watch out on this one. Watch out on it. That's for me the zone you would need to beat to breach if there is further upside. Jay says in crude, still focus on 2019 low if the pullback happened. Ted says great, thanks, really helps. Cheers, Ted. Good, man. I'm not really usually a fan of the end crosses, you know me, but this one sparked my interest because of where you are. Absolutely, yeah. And trend and price, that's a big one. Jay, crude. So I think you mean the 2019 low day close, Jay, because the 2019 low is actually way down here. Um, the 2019 low day close, or the June specific 2019 low day close is still support. And I actually haven't looked at this in a while. It's actually been holding support for a couple of days here. Here's the bounce and consolidation. So for crude, it's a really messy trade. You guys know we were talking about 48.64 months ago. This was back in November on the breakout. That was the first level of interest on that high. That breached into the open of the year, 51.67, which is now support, Jay. Next level up is just that pivot at 54.84. Let's see what the weekly chart looks like here. Yeah, it's ugly. I mean, all things held constant, right? You look at this from a technical standpoint. It's a breakout. Even if it pulls back. You're talking about the May low, Jay says. My mistake. Yeah, okay. Let me go back there. The May low. Yeah, like the June May lows. Yeah. I like it for still the exhaustive trade, but at the end of the day, you're in a contraction, right? You're seeing a series of lower highs, a series of higher lows. This thing is going to buckle one way or another. And I think it's going to follow the same path. I hate to be redundant, guys. You're probably sick of hearing me say this stuff, but it's going to be the same setup where consolidation is going to crack one way or another. And if it cracks higher, it's to tag uptrend resistance. And I still think the risk is for failure. If it cracks lower, well, that's the onset of the correction that we're looking for, broadly speaking. So treacherous times. If you're trend trading and you're in the direction of the trend, usually I'd be telling you guys, don't worry about this. Even if it pulls back, you're still good. No. If you are in the direction of the trend and you've been in these for a while, the trends are maturing. And this is where the retail trader will kind of fall in love. And then once the cascade starts, that's when they're bailing, which exacerbates the cascade even more. So be on the defensive, guys. I don't know. I'm not trying to freak anyone out, but just be on the defensive because this one-way market, they don't end well. Speaking of one-way markets not ending well, here's another 10% drop in Bitcoin. It seems only a couple of days ago, I tweeted out a chart as we were approaching 40.66. What's 40.66? Well, that's just the high day close. Again, these lateral levels of technical resistance that we highlight to you guys here all the time, people are usually oblivious about it. We traded right into that and failed. Guess what? Upslope resistance held pulled back. We started to throw the risk, and I just threw it out there. Bullish invalidation at 32,005. It's the 2021 low day close. Believe that or not, that's this year's low day close. Here was the low day. Here's your yearly open. The low day for the year came back right here on the 4th, and we closed right here. We tried to test it once, drilled way deeper, didn't close anywhere near it. Tried again, tried again. Here we are again. Look, today's close. If it closed below 32.05, guess what? That's a breach of upslope support. Even if we take a parallel, right? Even if we take a parallel, it's still contingent on this. It's still contingent on this. So 3150 is the actual 2-hour, I believe it's the hourly low close as well, if I'm not mistaken. Yeah, it's the hourly low close as well. So that's the line in the sand that I kind of threw out earlier on Monday, I think, or I guess Thursday in the last webinar here, as where we would really, that's where I'm more confident to say that there's a larger correction underway. Okay, because you have the consolidation at that point is breaking, whether you're looking at this from a triangle or wedge formation, or whether you're looking at it within the confines of this upslope, which again, the median line was just so clean, right? The parallel is just insane clean. So if this is legit, anything beyond 3150, 31,500, I should say, man, good luck. But a lot of people have been using this and saying that this is sort of the haven trade, and the fact that Bitcoin is pulling back like this, it's going to fuel risk assets. I wouldn't be all in that camp. I'm not of the mindset that this is a carte blanche hedge trade, guys, safe haven trade. So if someone's trying to push you on that as like the haven trade, the only reason Bitcoin's moving, they're trying to sell you something. Okay, it's an asset like every other asset. There are people who are starting to look at it as that store of wealth. Agreed, that market is there, but that is not the main market that is moving broader Bitcoin. It's the speculative market. Okay, so this is what speculative unwinding looks like. Okay, where you see a drop of this thing is buggy sometimes, where you see a drop of 25% in an asset in under a couple of weeks. But you're telling me that these guys are all sitting with this as a store of wealth, watching it drop a quarter? I don't think so. So, everyone, the more people push the safety of this trade, interestingly enough, the more vicious the volatility is getting. So watch today's close. If it buckles below 3150, I think we're in trouble. But that's all I've got on the menu for today. Thanks, guys, for dealing and being a little patient with this abridged schedule as we open up the year. It's been a radical open for 2021. Again, a quick reminder: I'll be traveling actually to see Jamie in Missouri next week. So we'll keep you updated, obviously, with the updates. But I don't think we'll have any live sessions. Definitely not on Daily FX stuff, and I don't think any here. But I'll keep you updated on the SB Squawk. Until then, have a great weekend. Stay safe on some of these trades, guys. Nimble is the name of the game here. So many of these setups are just primed, I think, for the next move. So we're going to want to be a little bit more nimble and give the market its room as we get into these key levels, and hopefully we get some failure soon. Thanks, Jay, Ted, Steve, Jamie. Thanks for all the comments. I will see you all next week. Cheers.